First off, thanks very much for joining us this morning. It seems we underestimated the uptake. We've got standing room only, but that's great news. Delighted, obviously, to be joined by Hamish, Damon, and Jonathan, who will do the introductions in just a few seconds. Unfortunately, Vicky's been called away to the UK at short notice, so she's not with us today. In the room, we also have Alenka Apperly, the regtech lead of the JFSC, Daniela, I hope I get this one right, Gingel of the JFSC's Innovation Hub, Andrew Henson, Policy Advisor of the JFSC, and Julie Kerr, the Associate Director for Financial Services in the States, Government of Jersey. So the purpose of today really is to talk through the changing regulatory landscape, in particular in relation to regtech and EID and V, very much staying within the scope of Section 4 of the handbook, which we all know and love. This is to afford the JFSC an opportunity to reiterate their changing stance towards regtech and to try and myth bust some of the misconceptions that in the marketplace and try and work with some industry peers and colleagues to try and find a way forward. In terms of running order, first off, Hamish will spend sort of 10 minutes helping us frame the discussion. We then have a small series of Q&A panel discussion topics for about 5-10 minutes each, and we'll see how we go. Once the panel discussion starts, we're very happy to take questions from the floor. We'd rather it was an interactive session, and it will allow us to move through the agenda, we hope. That's enough for me talking. Let's hand over to the panel for a quick introduction. Hamish.
Yeah, good morning. For those of you that don't know me, my name is Hamish Armstrong. I'm not a fintech expert or a digitalisation expert. I'm actually the Chief Advisor for Financial Crime at the Commission. So I give strategic and technical advice on all matters related to financial crime. But as you're all acutely aware, a lot of the kind of fintech and cutting edge technology out there kind of falls into the financial crime sphere often, particularly around the EID and ID and V kind of space. So it generally ends up on my desk to give a view on. So I'm here to talk through some of the details around that if I can.
And Damon Graver, I head up the advisory division at BDO here in Jersey, so work on all matters risk, and that links, as Hamish says, into the technology risk as well as the compliance risk, and looking at how automation and clients' internal processes can meet the needs of the JFSC and use modern technology to do that in a more efficient way, because we know we're all stuck for staff. That's not just here, that's across the globe in the compliance space.
So I'm Jonathan Wharton, I'm one of the founding partners of Tiller Technologies. We are a Jersey headquartered firm, but with staff in London, and we cover mainly digital solutions for regulated businesses. Now, obviously in Jersey, that is mainly trust companies, but also banks and wealth management firms. And I'm the commercial director.
Over to yourself then, Hamish, if you're okay.
Yeah, okay. Oh, thanks guys.
That's right.
Actually, we're going to pop out.
You grab me a coffee or whatever. Yeah, as I said, my name's Hamish Armstrong. I'm quite pleased to be here actually, because it's been advertised as kind of busting some of the myths that are out there in Jersey about the use of fintech and technology, particularly for financial crime. So that the first myth I really want to bust is that we're often here, but we don't necessarily hear it directly, but we hear it sort of secondhand. Somebody told us that the Commission doesn't really like technology and doesn't really understand technology and is very hesitant about the use of technology. So this is a great opportunity for us to come out and say absolutely clearly, and I'm sitting here right in front of you saying it now, that we are not anti-technology. We don't distrust technology. We think technology is the way forward. And we've been doing quite a lot of work ourselves about, in relation to technology, the use of fintech in quite a lot of different ways for some time. The first thing I've got up on the slide there, this is just to remind me, rather than any useful information for you, but it's our innovation hub. I mean, we've had a specific resource to deal with innovation and technology developments and inquiries for since 2014. Alenka, as has been mentioned, runs that for us. And Alenka, I don't know if you want to wave, you're here somewhere. So Alenka is practically full-time working on innovation and taking queries like this. Since it started, obviously she's got busier and busier. I think last year, 2021, we had 77, I think it was, individual queries and inquiries coming into the Innovation Hub. Some of those were direct to Linker, some of them were from firms through the supervisor, some were like seconded across from Digital Jersey. But these could be things like, what are the rules around this particular area? Can you give me some advice? They can be, I'm thinking of using a tool or setting up a particular business. Is that okay? Should I get a license? Do I need to be regulated? All sorts of inquiries coming in that Linker deals with. There's actually on our website, there's an innovation report that we published last year, and I'd encourage you to go and look at that, and it tells you exactly the kind of inquiries we get and the kind of work we do, the trends and the themes and what we see is happening there. I will say a big shift was last year when we published our strategy, and this is the first time I suppose that we made it really clear about our positive stance towards the use of technology. So if you'd asked me maybe 3 years ago about the use of technology, from the AML space, I would have said we're agnostic, right? Here's the rules, you've got to comply with them, we don't care how you comply with them. You can comply with them using paper if you want, you can comply with them using tech if you want. All we care about is you comply. So we had this very agnostic kind of approach. But the strategy last year, we've actually deliberately moved to a more supportive, positive, encouraging approach. So hopefully, that's what we're trying to do, and that's what you'll start seeing actually come to fruition, going forward. And that's not just externally; that's internally as well. So we're doing things internally. We've got to change our data strategy. We've really beefed up our thinking around virtual assets, which I'm sure you're all aware is coming down the track very quickly. We're continuing to develop our online portal, which is an automatic way for firms to communicate with us. That's being developed more and more and more. So hopefully, at some point in the future, that'll be the way that we communicate with people, through these kind of technological means. So we very much see this as not just for firms, but for us, a way to automate as much as we can that can be automated, so that the people can actually be focusing on stuff they need to be focusing on. And that's internally for us, but also for firms. We don't want people sitting down and wading through paper for 2 days when it can be done automatically, and then those people can think about risk. Well, they can focus on the higher risk areas of their business. That's kind of the way we see this developing and why we see it as a good thing. There's a lot going on, as I say, on the back of that strategy. But what we have done, I just did want to mention the RTA, regtech Associates review, that you may have been part of. I don't know, they did a bit of a survey and had discussions with industry. And this was, we wanted to know really what were the barriers for the take-up of technology, the take-up of regtech. Because as I say, we still get these anecdotal conversations about how it's really, really hard and no one can quite get any traction with it. We wanted to know why. So that's, I don't want to give you the answers, that'll be published at some point, but it's quite interesting. And that obviously, one of the barriers or perceived barriers, it doesn't matter if it's perceived or real because it's still a barrier, was that perhaps we're not as open to digitalisation in the regulatory framework. But there are also things that were just as highly mentioned, things like people assumed that technological solutions were really expensive, and people in the market didn't really understand them, and people in the market were having trouble integrating technological solutions into their existing framework, their legacy systems, this kind of thing. So it was really interesting for us to see what the barriers were, and what we'll be doing next year is coming up with a response to all those things. What, if anything, can we as a regulator do about getting rid of those barriers, dropping those barriers? Don't know if there's any questions sort of on that before I move on. I will say that the wider regtech approach, if you do have any questions about this, please see my colleagues afterwards. As I say, this is really a Linker's area, so she can give you a bit more detail about all our work in this space. But I did want to quickly, I don't want to just turn it into a presentation, it's meant to be a discussion, but I did want to quickly just set the framework for some of the discussions we're going to have in a minute when we get into the particular areas of particular products, because I think it's important to realise how the framework in Jersey actually works and what's allowed and what's not, and how it all fits in. So just bear with me, I'll just very briefly explain that the rules about, in my case, sort of AML and CDD, like we're going to talk about in a minute. We have legal requirements, and they're set out in the law, okay? So these are made by the states, they're not made by us, and compulsory. Then we have codes of practice below that, and and these are issued by the Commission. So these are rules that we can set. And again, they're mandatory. You have to do it, and there's a punishment if you don't. There's a downside if you don't. They're set out in our handbook, and you can read it in the handbook whenever it uses the word "must." That's the giveaway, right? And they're usually in a little box of a different colour as well, so it's all pretty easy. And then we have what's called guidance and this idea of safe harbours. And this is actually where most of the material we put in our handbook actually is. It's not mandatory, it's guidance. And these are ways that we're suggesting that you might be able to comply with your obligation. Okay, so the law sets the obligation or the code sets the obligation. Here's a way of complying with that obligation. You don't have to do it, but here's a way of doing it. But why they're important, and this idea of a safe harbour, is if you do this, and if you do it as we describe, we will assume you're meeting your legal obligation, and we'll leave it at that. So it's a safe harbour for you to operate within. You don't have to operate within it, but it's a safe harbour. And for example, and this is where it starts to get interesting, we're talking about ID&V, which is we're going to get into a bit of detail in a minute. The legal requirement in the law basically says, in relation to obtaining evidence, okay, how you get evidence of who your individual customer is. You have to obtain evidence on the basis of documents, data, or information. That's been in there for 10, 12 years, right? So people who say, you have to have documents, the law does not require it, right? Documents, data, or information from a reliable and independent source. That's it. That's the legal requirement. Okay, so that's pretty wide, right? And of course, firms are saying, well, what exactly does that mean? So we had to come up with some guidance around this. So also, there's only one code of practice that fits in this space, and that's that anything you do obtain, whether it's data or documents or information, you have to be able to understand it, language, translations, that kind of stuff. But then where it gets interesting is these safe harbours, okay? And this is what people are going to focus on. And like I said, they're safe harbours, they're not mandatory, you don't have to do them, but these are our ideas, our suggestions of ways to comply. That if you do this, we will accept that it is reliable and independent data, document, or information. And the first one, obviously, is original documents. Somebody walking in and showing a passport, and there's conditions around that. The second one, certified copies of documents. So you don't have to see an original; you can see a certified copy. There are rules around that and conditions around that, which we'll come on to in a minute, and we'll start talking about this idea of wet ink. The third one has been in there for quite some time: external data sources. You don't have to use documents at all. You can use external data sources as evidence of somebody's identity. And the last one, which is a more recent one, is using EID, so electronic identity. And this is, again, it's been in there for about 7 years now. And this is the use of kind of apps on your mobile phone or your tablet to upload images, and I'll maybe talk about it in a bit more detail later. But what I really wanted to say is that those 4 things are different alternatives. None of them are mandatory, and you don't actually have to do any of them. You can do something that you believe, and you can convince us fulfills your legal obligation, as long as it's data, information, or documents from a reliable source that proves somebody's identity. So that's kind of the framing of the discussions we're going to have in a minute. But I do think it's really important that, particularly on the wet ink one, we always get people saying, I need wet ink when I'm using EID. And no, these are 4 alternatives that are very, very distinct. So hopefully that's sorry to take up too much time, but that's a bit of a framing of the framework that we can have a discussion about the more details.
And as you know, wet ink is our starting 10.
Oh, is it? Okay, brilliant.
Go on, thanks, James. Thanks, Hamish, for that. Are there any quick questions, or are we okay to crack on? Let's crack on. Okay, so one of the, having read it quite closely recently, one of the 3 JFSC 3 strategic anchors in its framework is the supporting of its support for the digitalisation of financial services, and of course, for many of us, that's welcomed. There continues, which is why we're here today, to be misconceptions in the business community as to the application of technology to day-to-day practice, and I think that's, as you've alluded to with the safe harbours, that's where the confusions arises. So just to help us off then to Damon for a start for 10, maybe you could just outline your experience in this area.
Yeah, sure. And I think there's 2 different experiences. One is where there's local entities that operate solely in this jurisdiction, and they tend to have a ability to be more flexible because they control exactly what their policies, procedures, and compliance framework are. there's still some of the legacy 7 years, as you said, Hamish, prior to that of saying, I need wet ink on everything. And there's maybe a reluctance to jump into the, I think you mentioned at the beginning, the cost of technology. This must be more expensive. So that's slows down the adoption of technology. Then you've got the multi-jurisdictional who then say it's too complicated because I don't have to only comply with JFSC regulations, I need to comply with Guernsey, Isle of Man, Cayman, BVI, and also I'm owned by a big onshore presence in the UK, somewhere else in Europe, the US, and therefore I'm not allowed to change what I do. But the key thing for us when we're working with clients is when you have your obligations locally. You have an MLCO here and you have to exercise your duties under the local legislation. So you need to push back against the group. And one way to do that is through the use of technology, because we all know we've got limited resource in terms of people time. So technology is actually reduces the need for people, not as in reducing the number we have, but actually, as you said, we just let them do things that they should be doing. And also it then means that actually your data is more accurate. And that's critical in where we're helping clients further down the compliance chain. You've onboarded a bunch of clients, you now have to do NRA reporting, you have to do sanctions checks, you have to do various things further down that chain. And actually, if you've got poor data to start with, then actually how do you do the rest? You're just creating more problems further down the chain, and then in the long run it costs you more.
Thank you. Hamish, maybe you could just outline for us what the actual stance is on electronic requirements for the certification of documents as an element.
Yeah, okay. So certified copies of documents. As I said, the basic starting point for evidence of identity is seeing somebody's passport. A long time ago, 20 years ago, everybody realised that that's not always possible, and so this idea of certification sort of popped up. And the idea of a certification, a certified document, is that the industry, you have in your hands a certified copy, a copy that somebody you trust has seen the original, has seen the copy, and is certifying that that copy is the same as the original that they've seen. Okay, and then so you get various rules around that. So the person who does the certification has to be of a certain standard. Your lawyers and doctors and people they can trust, if you like. It has to be a certification, using a certification of certain facts. I've seen it, it's the same, etc. Signed and dated. But the idea of you having the actual certified copy, right? So that means that the certification has to be on the copy you're holding. And in the old world, that meant an actual, wet ink. That's where the term wet ink came from, an actual signature on the piece of paper you're holding. Because back in those days, it was, of course, a photocopy that they would stamp, true and certified and sign.
In the old days, they still do that.
We'll canvas opinion.
So this is where it started out, of course. So that's the idea of wet ink. So what you can't do, and what you couldn't do, and what you can't do, is then get that certified copy and then take a copy of it and send it on, or take a PDF image of it, or a scan of it and send it on, because then the copy that the bank or the TCB or whoever has isn't the certified copy, it's a copy of the certified copy. So it's a bit complicated, but the idea was that the certification has to be attached to the copy you have. And in the manual process, that was wet ink. What we started hearing about 4 or 5 years ago was, well, what about digital signatures? Can that work as well? So we started saying, in fora like this, we can see how digital signatures could work, as long as you have an electronic copy and you have a certification that is attached to that copy. And there's I understand, and you guys can tell me, there's tech out there that can do that, can actually affix the certification to the electronic copy. Then if you receive that electronic copy and it's got the certification attached to it, we say that's the same as wet ink. That's a wet ink copy. And what we've done in the most recent update of the handbook, and Andrew is here who did most of the work on it, correct me if I'm wrong, but we don't even use the term wet ink anymore. What we do is we say it must be certified, and it can be certified manually, or it can be certified electronically. So what we've been saying for the last few years, it's perfectly fine to use our electronic certification. We've actually embedded into the handbook now. And that was January this year, and I think it goes live at the end of the transition period is about now, or maybe next month. So we've tried to make it really clear, hopefully we have, that as long as it's done properly, the tech works, electronic signature is fine. Then we consider that to be the same as wet ink.
But that's not a change in the obligations, that's just a clarification.
Exactly.
Essentially, we've
Exactly.
always been able to do this.
So, because
Yeah.
because I've read it, it says the electronic digital signature solution must lock the certification into the document in order to be acceptable.
Exactly.
Yeah. So I guess, Jono, from a technology perspective, how does the technology solve this or meet this requirement?
Yeah, well, I think the first thing is digital signature technology has been around certainly more than 10 years, and it's now used all around the world. I mean, everyone's probably heard of market leader DocuSign, but there are other ones. Frankly, we're agnostic. But it's very important, very easy to implement into a tech solution. I mean, APIs and all the connectivity is fantastic. But at its heart, it's as you said, Hamish, what this is really doing is linking digitally the person who e-signed it to the document through a sort of digital fingerprint, almost, the best way of thinking of it. But that travels. So when we receive an e-signature document, the metadata, as it's called, i.e. all the encoded digital fingerprint about where it was signed, you know, what IP address, dates, geolocation. People don't realize that a lot of these e-signature technologies have geolocations. You can actually say, yeah, it was signed, you know, in Jersey on the 14th or whatever. That stays with the document. Now, typically you normally have to log into a DocuSign website to see that encoded document in your sort of file storage. But if you take the electronic API version, as we do, we attach that metadata or that certificate to the document. So it doesn't really matter where it travels or where it is in the system, how old it is, you've always got that certificate with that document.
And I think the key thing as well there is the metadata provides you with actually more assurance than a wet ink signature. Because I can write, I signed this in Jersey whilst I'm on holiday in the Bahamas. Whereas using DocuSign, it actually says, you in the Bahamas when you signed this.
Yeah, but I think the really crucial point is because of the certificate that comes with it, the way the technology works, that document with the signature is locked. So if you think about a manual document, somebody could tip X out, you know, sign it and whatever. You know, people tend to think the new technology is less reliable or less trustworthy than the old way of doing it. In many cases, it's the opposite. You can't change that digital document without it becoming sort of known, if you like.
Yeah, I think it's important to highlight some terminology differences that some people think electronic signatures are when you scan your own signature and then you insert it in Word into a document. That's not what we're talking about. As Jono says, it's around a different type of technology that actually locks those signatures in a certificate and attaches it. So people still, you know, attach signing sort of letters and things that their scan of their own signature, and that's not an electronic signature. That just happens to be a standard signature.
They make a good point about people thinking that, you know, the tech solution is less robust, if you like, than, you know, the old way, and that might be one of the dampeners on moving towards a tech solution. But I completely agree. I mean, a lot of the tech solutions that we see that firms are using are a lot more robust than the old manual way. And when you come to talking about, you know, the EID type things, you know, there's some of the solutions out there are absolutely brilliant compared to me bringing in my, you know, New Zealand passport to somebody in a branch who's never seen a New Zealand passport before. So yeah, I very much support, you know, and that's why the commissioners change our stance and actually trying to encourage us. But not only do we see it as, you know, more efficient and more effective, but more efficient, but it's also more robust. You know, it's actually raising standards in a lot of places.
That's useful. So let's move on to the second challenge, which is clearly related and we're already straying into the zone. So the handbook and guidance notes talk about EID in relation to the AML, the code of practice. Finding out identity and obtaining evidence, I think is the phrase, and it was on your slide before. So I guess, Jonathan, could you just outline again how applications look to meet these challenges of identity and evidence?
Yeah, I was just checking my notes because, like you, I've checked the handbook. So the phrase is suitable certification, and I don't want to be taking your seat, but that's what this is all about. Now, you know, I think you made a great point. How many people rely on a signed certification for passports based on a passport format that they've never ever seen? You know, if you think that the old way of doing it is cast iron, it's deeply flawed at its heart. we know, we had an investor present a South American passport. An accountant had signed it. You think, you just know that accountant has never seen that type of passport before. Let's not even get into the utility bill thing, because we're going to cover that later. But let's set the scene. So suitable certification is based on a premise that is already deeply flawed today. But what this is really doing is going through 3 separate processes to replace the old way of doing it. So the first thing is the document that I'm looking at electronically through an app and that kind of stuff, a proper, true, genuine document. And we'll get into the detail a bit later. Yes, there are lots of ways of doing that. We would argue more efficiently and more accurately than the old human eye. The second one is, does it match the person presenting it? Because the person's not in front. So that's where we're getting into biometrics, the sort of airport technology when you walk through the gates. That's been around for a long time now. I think Gatwick Airport, those gates changed probably 10 years ago. And then the third thing is, can we check any other data around that person in terms of, well, first of all, is it a real person? Because people worry about, certainly nowadays, deep fake technology. So the idea that you could sort of almost serve up a TV screen of somebody pretending to be the person that's in the photograph, yeah, that's probably going to happen in the future. And it's one of the reasons why I think the sort of use of webcam technology is going to start to fade away, because at least until somebody cracks them, mobile apps are far more secure and talk to the camera in the smartphone directly, so it's much more difficult to sort of use deepfake technology. So those are the 3 separate processes going through, and then you can link in all sorts of other things which will come, not least replacing the utility bill.
And I think the key thing from where we sort of interface between the technology and you talk to the regulators as well, it's about documenting your approach. Write down what you're using, why you're using it, how you're comfortable with it, because you don't want to sit in front of a supervisor coming in and not be able to explain why you're comfortable, because commission people in the room, I'm sure that's what worries you when someone sits there and you don't feel that they know why they're doing what they're doing. So the key there is robust policies and procedures and documenting that and saying why you're doing it. And I think another key thing is you don't need to do this for everything. I think a lot of people think I need to lift and shift my old wet signature process, dump it in the bin and replace everything electronically, and it's going to cost me a fortune. But actually you can offer all 4 different ways if you want to your clients. If you're in the trust space and you've got some clients who have been clients for a long time, they might not have smartphones and might not want to transition to that. You don't need to force them to transition to that. You can start with your newer clients, new jurisdictions, and just do it incrementally. And I think that's also been a barrier to people going, I don't want to adopt this whole process and pay a fortune for a new one, particularly if I don't know if the regulator's going to like it or my clients don't like it.
I think Alinka said in our prep session something along the lines of basically effectively articulating what the technology is doing, rather than turning up and saying it does magic and we're compliant.
And yeah, whatever technology firm you're using, you've been through the whole process of building, designing, talking to regulators as well. So the technology provider should be able to provide you with a lot of information about why their tool works, how it works. Ask them to talk to them.
Yeah, that's a good point. I mean, what we don't want to see as a supervisor is to turn up and say, well, how does your digital onboarding work? And they go, oh, it's that machine over there that we bought last year. What we want is people to say, well, this is why we bought it, this is what it does, and this is how it does, and crucially, this is how we tweaked it, this is how we set the parameters, and why. Because a lot of these tools, you can actually set the parameters and operate them differently. So this is why we don't necessarily want to get into the space of approving certain products, because it's all about how you use it, and how you tweak it, and how you integrate it. So what the discussions we have when we go on site are along those lines. Okay, you've got your other products, tell me about it. And like you say, you should be able to have those discussions. You should be having those discussions with the product provider when you're purchasing it, when you're deciding which one to use. So hopefully, you can explain to your supervisor why you've selected it and how it works and why you think it's appropriate. That's the kind of conversation we're looking for.
John, from a practical standpoint, do you have an example of how you would take a client through that journey?
Yeah, so I think one of the problems we've got in Jersey is that most of the businesses here, even the small ones, are actually very complex. financial services businesses, particularly compared with even large firms in the UK. So what this is really about doing is saying, okay, baby steps. Don't need to teach any of the project people in the room, but that's often the way to do it. So one of the things we're seeing in Jersey is firms across the board, I'm going to say, make a stab and say 75% of firms that said they were going to start something like this 2 years ago, still back where they began. So why is that? Well, often it's quite an intimidating suite of technology. There's the regulatory fear, there are all the other issues that I think Stuart, you talked about as potential problems earlier. What we're saying here is, okay, if you break down the kind of technologies that we're talking about into the separate processes and then compare with the handbook, most of these technologies have been around quite a long time. They've been used around the world by governments, police forces, I mentioned that. But you know what I mean, these are not things that appeared last night. This is about just proving to the industry that each part of the technology is well tried and tested. It does exactly what it sets out to do and against the handbook. And thirdly, that this can be integrated into existing technologies, so it's not replacing or interfering with complex back office systems, but helping to get this client data more efficiently, better for the customer and better for the firm, into a digital format really efficiently. And then, once you've got it in digital format, you can help maintain it in digital format. And I think we'll come back and talk about that.
Yeah, thank you. And I guess, Hamish, we acknowledge you're going to talk about the Jersey regs, of course. But assuming someone came along with a correctly articulated proposition ahead of the project, what's the JFSC stance on supporting that process?
Yeah, well, that's exactly what I think it does, and every day we've got people coming to the supervisor, and we encourage it. If you are worried about the use of tech and whether it's going to be acceptable or whether it's going to work for you, we encourage you to have those early conversations with the supervisor, and we have those every week. And like I say, we can't rubber stamp anything in advance, obviously, because us taking comfort that it's been integrated properly and it's operating properly only comes later. But we can say, well, you're asking the right questions and you're talking to the right people, and it looks like it should work. We can give that kind of comfort, and obviously, it just becomes part of your ongoing supervision, just like any other piece of tech or any other system or control that you put in place.
And so a third, we've strayed into it already anyway, as always, but is the challenge regarding address verification. Again, the law and handbook requires a regulated business to evidence the address. Now, Damon, what challenges do you kind of see in this area?
Yeah, I'll start with personal challenges actually.
Yes.
So I work for some charities and try changing a bank mandate in let's say a local bank. I'm not going to name which one it is. The pain you go through is horrendous. I went in, had to take in my utility bill or something that proved where I lived, and a few other documents. I did that, and the following day this particular bank contacted me and said they'd lost them. Could I bring them in again? So I said, actually, I'd like your DPO to explain what you've done with my personal data, please. And then they magically found them 2 hours later. I'd obviously irritated the bank, so then 2 days later they said, it's invalid, the document you provided, we can't accept it. So I said, I need more information, which document, so I had to bring in 2, didn't I? And they said, oh yes, there's one that didn't have your full address on it. So I said, okay, which one is it? They were sort of shy in telling me actually what I'd given them, even though it was mine. Turns out it was my rates bill, and the reason they rejected it is because it says your name at the top and your address is in a box further down. But your rates bill actually says whether you own it and occupy it. So it's actually more robust than an electricity bill that says, I rent this house out and I've never set foot in it. So I think the challenge is actually the process that people go through and the people that we have to interface with as citizens and users of financial services. This regimented can't think outside of the box or just make a informed decision. So the sooner we move into it's electronic, and if you pass the process that's been designed, it's going to be a lot easier for us than having to deal with somebody that just says, I've been told that's wrong, it doesn't work.
Yeah, I'm bringing John in here. So address verification is an international problem. Everyone in this room deals with clients across the world. So again, how does address verification technology work and look to solve this challenge?
Well, it's really interesting. If you think about what we were just talking about, which is the bit that everyone focuses on, which is all the biometrics and the passport scanning and all of that. And that really has moved on a whole long way, including the fact you can scan the information straight off the passport and cut out the OCR bit. The address verification, as it turns out, is much harder. We operate with wealth firms in the UK and the like, and for them, it's all about UK residents. 99% of firms we deal with, only UK residents. To check the address electronically, and what I mean by that is that you have asked the customer electronically to fill in a little sort of form fill, whether we've provided that or the wealth firm. Please give us your address. Okay, so you know that address now. What we've got to do is to not rely on any documentation that customer gives, in paper form, whatever. We are going to go straight to the equivalent regulatory standard database that in the old days or current days you would have asked to print out and bring in. Okay, UK, easy. Electoral roll, pretty much you're done. Or failing that, Experian credit check headers. There's a whole plethora of places you can go to. Real time, less than 2 seconds, straight back. Yes, we found that person at that address, and you're done. Internationally, so it's not uncommon to find firms of all shapes and sizes in the Channel Islands that deal with customers resident in 100+ countries, and that's their standard operating procedure. And that single factor alone has ground them to a halt in the use of EID&B. Because if you're going to ask somebody for a copy of their utility bill, you might as well just get the paper copy passport. So the way we've done this is to say, right, we've looked at the handbook. It talks about, I think, suitable quality addresses, example being credit reference agencies and government type. We're not reinventing the wheel here. What would firms have accepted in the past? I think we all recognise, voter registration, utilities, credit reference agencies, banks, and other obvious sources. So what we've done is stitched together providers from around the world in fully electronic form through one electronic source. And what that means is that we can say, it varies from month to month, some add and some drop off. We can find at least one electronic regulatory quality database in about 150 countries. But response time, our SLA is less than 2 seconds, fully electronically. Now we can also provide, this old phrase again, the metadata that supports that to say, where did we find it? What type of source was it? We're not going to say, well, it was Indonesian electricity company. We'll say it was a utility company, and we matched on name and address and possibly date of birth, if that's applicable. So it's actually pretty good quality databases compared with the old way of doing it. Now, one of the questions we get is, well, how often are these databases updated? Well, the sort of no more or no less regularly than the same database that somebody would have printed off their address in paper form. If you could print it off in paper form, then you can access it electronically, because we are going straight to that data source. The good thing is it can't be interfered with. And as I said earlier, think about the paper format and how almost laughable that's got as a proof of address nowadays, given that everyone's printing them off the internet and you can Photoshop it in 5 seconds. It's a really good example of how technology, which may be distrusted at first, has leapfrogged right the way over the existing processes in terms of their reliability and consistency and anti-fraud device.
Yeah, and I think as well the onboarding clients, say from other jurisdictions, it's held back the likes of Jersey and people operating here because they say, well, I can't onboard clients from Africa because they all use PO boxes and I can't get anything that says a real address on it. So actually you're opening up opportunities to onboard clients quicker and not turn away those difficult to onboard clients by using modern means.
Yeah, I mean, look, the question that always comes up, especially with Jersey firms, is UAE. I've spoken to people who've lived in UAE for 5 years and they still didn't know their address when they left. So I think you've got to admit that we can only go so far as, if you like, the traditional source could have gone. So if there is no utility, no connection, no digital coverage of that person in that country, then that's going to have to resort to a manual process. But the argument against that is saying, okay, fair enough, so maybe you have got a few countries where you've got more customers, but think about all the time you're saving from those countries where we have got good coverage. That's just going to flow through fully automatically.
Cool. I'm conscious of time, so we've got other things to run through, but we hope we get to this point where we'll run short. Are there any questions from the floor for any of the panelists before we carry on?
Sort of an observation and a question. So the kind of barriers to change are generally the kind of likelihood of success, and then the impact of the benefit or the materiality of the benefit or the harm that you do on this. In my business, financial crime is our single biggest risk, not because of real outcomes, but the perceived kind of materiality of the damage that you cause. So for us, it's actually, when you refer to it as technology agnostic, what we all read is adverse to technology or ambiguous to technology. So it's really good that the latest consultation paper, I think, is going to be the watershed moment, if I'm honest. My question is, would you be willing to take 1 and 2 off the table as your safe harbour options and just say our preferred is 3 and 4? Because if you do that, we'll all change in 18 months.
Interesting. I think that's probably a question for people on higher pay grades than me. But interestingly enough, when we were developing the EID guidance about 7 years ago, I think, we were looking at potentially building a shared utility on the island. I don't know if anybody sort of was involved in that. It's kind of come and go various times over the last 6 or 7 years. And one of the things that was mooted then was, why don't we build it, the government can run it, or the registry can run it, and then we'll make it compulsory. We'll say you have to use it. And there wasn't much appetite at a governmental level for that kind of intervention in the market. So I suspect that you'll always have the old school options available at least, but we'd anticipate for the reasons of efficiency and effectiveness, and just you don't want to get left behind, that hopefully, touch wood, people start moving towards the...
But if you take a risk-based approach, as you've just beautifully articulated then, the old way is actually rubbish.
Yeah, exactly.
It's junk, right?
Yeah.
So
I agree.
just stipulate.
I wouldn't say rubbish, but
Yeah.
but the technology is
Less
potentially
rust,
a lot more rust. Yeah.
But if you want the behavioural nudges to get you there, you're going to have to be prescriptive.
And also you get other benefits as well. That cost question as to the raw cost of implementing a technology like Tiller and doing things is a number, but you've got to balance that against other benefits. And the other benefits are further down the chain as well in terms of your CRS reporting is more accurate, because actually you've got it from the individual in an electronic chain that hasn't been forgotten to be updated in the database or put against the wrong person, etc. and things like that. So you've got to look at the whole, what do you use that data for, and how are you using it better and more efficiently by starting it in the electronic space, and then add those numbers together. I think Stuart, you've got some good numbers as well around how long it takes to onboard manually versus electronically.
Recent study, 5 hours to onboard a natural person. That's if you do it at how much you charge an hour. That's about 1,200 quid of billable time spent checking a natural person's passport. Next question.
Yeah, just a quick question. Technology's moved on. I'm in the business with multiple jurisdictions. I need to do utility bills, press notifications and things. Barrier to me has always been on the best of this time, and actually I have no idea what percentage use I'm going to get of that. So is it an extra cost to me? I was looking at it a few years ago,
Yeah.
Given the sorts of tools you've got available now, both of you, what sort of, for multi-jurisdictions, what sort of percentage
Okay,
take
well,
can you have internally with the product?
We presented to a firm last week, Guernsey. Unbelievably, they are present in 150 countries. And big numbers. So they were very good in sending us through all the breakdown of their customers per country. Now, as you would expect, the bigger countries tend to come up higher in terms of population coverage, but then you've got this long tail at the end where maybe you've got 5 customers in the middle of nowhere. So we did a bit of calculation and came back and said, okay, in your top 50 countries by coverage, by customers, we've got a 85% plus coverage of the population in that country. Now, people will say, yeah, but what about the other 15%? That's always going to happen. But if you, conversely, what you'd say is probability-wise, the type of customer that a Jersey firm would be trying to verify is likely more probable to have a digital footprint than the 15% who are just nowhere to be found. So, we cannot obviously guarantee hit rates, i.e. the probability that we will find your customer, even if we had 95% population coverage. But there is a certain inference you can make. The coverage of most countries is much higher electronically than probably most people in this room realise. And it's only ever going to evolve because, even in Jersey, we're talking to the government and utilities about getting direct access to the population address database. 5 years ago, even 2 years ago, that probably couldn't have happened.
And I think just to add on to that, so that's the ability to onboard those people. The other thing is talk to your clients, your existing clients, and ask them and educate them as to why you do it. Don't just turn on EID and go, next time you speak to us, you're going to be using this, because that will actually turn them off in the adoption from your client perspective. You need to bring them on that journey, and what we see is new clients and expanding business are perfectly happy to go via an EID approach. Your legacy clients are the ones you need to explain why it's better, and of those, about half of them are quite happy to do it. I mean, how many people have got Revolut in the room? Right. So, how did you onboard that? Did you send them any bits of paper? No. So, adoption is key. Yeah.
Nadia, did you still have a question?
It was sort of related to what the chap said over there, but if commissions to make the external sources and EID almost the preferred route, you then end up with, from what you're saying, the difficult clients, because you can't get that verification, being left with the really less reliable approach to trying to onboard. So that kind of almost makes it even more dangerous to be using those other two that we now know aren't as reliable. But I suppose if the commissions come out and sort of say 3 and 4 are their preferred option, again, I think that would help to move industry, even if you weren't going to take it away.
Yeah, and to be fair, I don't know whether that's going to happen, but it's not off the table. And like I said, we did this big what are the barriers to adoption piece, and there'll be all sorts of things coming out, strategies coming out of that next year, and that's definitely one of the things that they'll be looking at. Should we do something in that kind of space?
But I think also if you've got a client who was hard to onboard before, then they're a client who's hard to onboard. So how did you justify it before?
No, but I'm saying is obviously we're all discussing how it's less reliable. Then you end up with probably the higher risk client from the highest country with the less reliable.
Thank you, Stuart.
Yeah, so I agree, 3 and 4 are preferred choice, and my knowledge our organisation has gone to 3 and 4. But in a number of jurisdictions, Jersey being 1 and 2 is preferred by the banks. So irrespective of what the regulators say, that we can use 3 and 4. The minute we use it, they say, well, we don't want this, we want 1 and 2. So you have to square 1. So adoption is almost off the table in some jurisdictions.
Do either of you want to comment on where the banks are heading?
Look, I can only give our position on this, which is I totally get it. The banks, given their international nature and all the shenanigans that go on in decision making, are difficult. It's clear to me, given the conversations we've got going with 3 banks, that they really realised that they're in danger of losing this if they're not careful. So I can tell you one of the top 3 trust companies in Jersey that I went in to see a few weeks ago, the CEO said, we've had enough. We've told the banks if they don't get their acting gear and start accepting our digital pack as standard, we're going to find an alternative. And you could say, good luck with that. But I think the size of business has made these banks wake up. So we are getting inbound inquiries and working with BDO to say to the banks, look, one of the problems you've got is operating in an international jurisdiction and you're not getting support from the head office in the UK or elsewhere. You've got to make a decision. You can't wait for them because it's never going to come. We can provide that international business model to support the industry clients here.
I think the other point as well is that we talk a lot about the importance of staying on the right side of the law, which is critical, the right side of the regulator, critical, operating efficiency for operating margin, which is critical. But at the end of the day, the banks will be dragged, whether it's kicking and screaming or willingly, in the case of some of the banks that we're talking to in Jersey, will be dragged into the no choice but to adopt it because of customer engagement. You know, we forget that a lot of the. I mean, I'm 60 years of age. I'm a very old individual now. But as my kin and older folk pop their clogs, and you have the younger millennials and the next generation Y coming through, they're going to demand this technology. So it's about customer engagement as well. And I think ultimately, you know, the direction of travel is going to be digital in the next 10 years without a shadow of doubt.
Absolutely, the banks are aware of that. You look at their programs. You know, my daughter's 17, has got a bank account, and had to go into a bank. She was like, "Why do I have to go into the bank? This is crazy. I can do everything else on my phone." The pressure is building.
Yeah. At the back, please.
So this is not my immediate area, but from my understanding of electronic ID and V, there is a big, perhaps a question mark or even a sticking point around whether it's outsourcing or not. I've got my own views on that, but I'd love to hear yours.
Yeah, well, it depends. To be honest, it depends how it's set up. I mean, a lot of the, you know, if you're using a product provider to do all the work for you by contract, that could be outsourcing. If you're purchasing the product and building into your own systems, it's not outsourcing. So you're absolutely right. It might be, it might not be. It all depends on how you set it up. And that's the kind of discussions that you need to be having with a supervisor and/or a linker in terms of, you know, a lot of the queries that a linker gets is we want to use this tech. Is it outsourcing? And we do a lot of thinking about that, and it all depends on basically how you establish it and how it actually works in practice.
Yeah, who's doing the process? And you know, when we work with clients, we map out that process, map out the control points and the accountabilities. Go to the RACI term. You know, you do a RACI of the process and the technology, and you see who's responsible, who's accountable, etc. And that then helps inform. This could be outsourcing. This definitely is outsourcing, etc. And then we recommend sit down with the regulator, present it, and say this is what we think, and that's if we're a million miles away from what you've got.
Yep, exactly. Like I say, I think has those conversations every week.
So I'm conscious of time. Are there any other questions from the floor before I wrap up? Cool. Just to make you aware, actually, so Alenka and the members of the JFSC are actually launching here a fortnightly drop-in clinic for regulatory matters and all these sorts of things. Most of us will be staying around for a while after this session, so please, feel free to tap us on the shoulder or get hold of us outside. Lastly, I guess on behalf of our partners, just Digital Jersey, the JFSC, Tiller, BDO, thank you for joining us this morning, and I hope you found the session interesting. I think we need an hour and a half next time. Thank you.